Okay, welcome everyone to another episode of Shashank Redemption. And I am super thrilled and excited to have with me Dawar Alimi. He is the founder and CEO of a product that has intrigued me enough for me to become a client now. So that's something we'll be talking about shortly. But welcome to the show, Dawar.
Thank you, Shashank, and thank you for having me.
Of course, let's dive into a little bit of a more of a personal story if you're willing to share that, because I find it fascinating. An immigrant to an immigrant kind of a story it's interesting that you're Southern California, I'm here in Silicon Valley, and the Indian is talking to an Afghan, so to say, for a podcast on entrepreneurship and fintech. So this is quite and kind of an opportunity that you'll only find in, say, a place like California or the US. So extremely grateful for that. But talk to us a little bit about, I understand that you came to the US as a refugee when you were, 5-6 years old. So
yeah.
Talk to us about that journey. I mean, how did that come?
Yeah. I came, good question. I think you and I being on this podcast is a testament of what you can do in this country, right? Absolutely. As long as you put your mind and energy and focus into it, you can do anything that you want. I came here as a refugee when I was 5 years old from Afghanistan when the Russians invaded Afghanistan. So it's interesting what's going on today with the Ukraine and all. And I feel for both sides. I remember when I was younger, when the Russians invaded Afghanistan, I was like, oh, it's about the Russians. And my father said something very, very important to me at that time.
Mm-hmm.
He said that it's never the people. The people of all countries are beautiful.
Mm.
The government, it's different. There's politics that are different, but the people in every country is beautiful. We're all humans. And I never forgot that.
Mm-hmm.
And I think that a lot of that goes to show how I think the world feels about each other. I think that whether it's one country against another country, or you're seeing what's happening in Ukraine and Russia, the people love each other.
Yes.
At the end of the day.
Mm-hmm.
And we should never forget that.
Yeah, that is interesting, is that your dad said something like that. One of the earliest teachings or quotes that I remember from my mom, and I don't even remember how young I was, is a term in Sanskrit called Vasudhaiva Kutumbakam, which basically means the entire world is your guest. And you treat them like a guest, something which has kind of stuck with me. I think I might have been 6 or 7 when she kind of taught me that. And it's interesting that she never traveled the world. So it's not as if she has learned it from traveling the world or embracing other cultures, just a value that she had, and just the way she thought about it. And I hadn't seen one person at that age which looked different than me or spoke different than me. It was an alien concept, so to say. The world is your guest is because I didn't know the world outside of where I lived, which was a small village in India. But it's very interesting that your dad said something very similar to you.
Do you think that that's part of the area that we live in? Because I think that the area that we live in, I think that people are very hospitable.
Yes.
It's a very hospitable. It's within the culture. It's within everything that when somebody comes to your house or your village, that you treat him as your guest, and you treat him much better than you would treat anyone else. Family for that matter. I think it's part of the culture. I think it's part of the area. I don't know. It's very interesting.
It is, and a culture that even if it comes from that area, I'm sure everyone who's listening to this show can learn from, especially in the kind of climate that we live in right now, how heated it can get from political perspective and personal viewpoints perspective. So I know this is a show about entrepreneurship, but I mean, the values that we grow up with and the values that we stay with is kind of drive us as a person. And then especially as an entrepreneur, creating a better world, creating a more equal world, I think that should be part of our impact. And I think that's important that we think in that direction.
I agree.
So Tawar, let's talk about some of the things that you did, and we will definitely, of course, come back to Lenderprise, which is what I'm excited to talk about. But what led to Lenderprise? It's always in some of these shows here in this podcast. I always want to understand what led to the current company or the current product that you found. What happened before that? I know that you were in the mortgage space before, but talk to me a little bit of a journey leading to Lenderprise.
You want the long story or the short story? Long story short, long story is my parents wanted to become a doctor. Short story is they were disappointed when they found out that I got my master's in computer science, actually an undergrad in computer science. Then after that, they understood what computer science was, and that was my passion. And then I went to grad school. But my journey has taken unique turns. I mean, I got in this industry in 2001.
Okay.
But it all occurred within the mortgage industry. Within the mortgage industry, prior to that, I was an engineer at a company called GTE, now called Verizon. Okay. And then at one point, I ran into some friends, and they said, "Oh, you need to get in the mortgage industry." And I said, "Well, why?" I mean, I said, I've got a great career. Why would I want to get into the mortgage industry? As a software engineer, I think I'm going to do well, and I'm comfortable, and I'm enjoying what I'm doing. Until I saw the checks that they would make, the commission checks. And at first I didn't believe it, Shashank. I was like, that has to be the down payment of the person's house or big payments that they're making to buy their home. And they're like, no, this is my commission check. And I was like, wow, what am I doing right? What am I doing wrong? And what are they doing right? So that's kind of how I stumbled in the mortgage industry. I ended up working at a friend's broker shop at that time. Okay. And then I ended up running the broker shop, implemented several technologies. And then around 2001, I created a company called CMS Software, and we built an LOS with a couple partners from Caltech here. We live in Pasadena. And we built an LOS, and then I also created my own mortgage company called Cornerstone Lending, which ended up becoming a wholesale mortgage company. Yep. Servicing multiple states. And then shortly after that, because when you're in the industry, you start noticing that if you have a license, then you can do several things. And then I ended up opening up a real estate office called David Michael Realtors. My partner at that time was Michael. Okay. And then after that, then I was like, oh, you know what? We could probably make some more money and have escrow as part of that. So then I opened up a DOC escrow company, which means that you can actually accept escrows from other companies, not internal within your organization here in California, called Pervasive Escrow. And then I did that for a while until 2009. The mortgage market crashed. And then I got actually out of the industry for a while, and I was CTO at a company called it was a tax credit company here in Pasadena. And then I worked for a short time leading a division at Bank of America. And then I got sick of that, and I was like, I've got this entrepreneur spirit. I've always had an entrepreneur spirit. And then I got a pass from my wife. What was interesting is at that time we had our first child, and then it was very difficult to get a pass from my wife to say, hey, look, I'm gonna leave the workplace and not make any money and to start something, and I didn't know what to start. So we started Lenderprise, and I started Lenderprise with my co-founder Lee Koo. And then shortly after that, he brought in his brother. And then we had our friend German Centeno that was part of it. And then we got introduced to Kevin Costner, Rod Lake, then Glenn Stearns, then Regions Bank, then Mr. Cooper. Then now we have several private equity companies that invested in that have invested, Argentum, First Analysis, and Mathers and Associates. So it's interesting how things turn. I mean, I think that looking back, it's a little bit of it's a lot of hard work for sure, because during that time when you're building a piece of software and you're not making any money, you don't know how things are going to end up. And I think it's a little bit of luck, and then most importantly is just to stay the course and just believe in yourself and believe that you can succeed.
Dawar, I have a question for you. So when you started thinking of building Lenderprice, which, by the way, for listeners here, if they're not aware of Lenderprice, it's a pricing engine. It's a product and pricing engine for mortgage lenders like us at Insta Mortgage. Mm-hmm. Now, what's interesting is that there is a company that has a huge amount of market share in the space. They have been, I think, in the business since 80s. And pretty much when you think about pricing engine, it's almost kind of synonymous with either Optimal Blue when you are a lender, or Loan Sifter if you're a broker. And so from an entrepreneurial perspective, Dawar, when you look at a market where you see that there are big names, there are probably two really big names with huge amount of market share. How do you think about entering into that space? I mean, doesn't that bother you? The fact that, hey, they are almost synonymous with pricing engineer. Should I be getting into that? I have computer science degree and I know how to build this, and I have Caltech friends. Maybe I should be building something else. So why a product and pricing engine, Dawar?
Well, first, I understood the space very well, right? So I've been in industry for a long time. Secondly is this: these are solutions that have never been re-architected. They're legacy solutions. So there's an expiration date to that. And when I got into building the solution, which was in 2015, 2016, I noticed that nothing has changed. It's the same old framework. And then as an engineer, you know that solutions that were built in the early 2000s didn't really focus on user experience. And that's why you saw a lot of entrants in the market, especially in our industry, focus on user experience, making it so that you can create more efficiencies, making sure that the back end of the application can be done more efficiently. But looking at there's two things that I think that if you're going to build a solution that you should look at. Number one, what solution are you competing against? How long has it been out there? What type of tech debt does it have? What does the future look like for that solution? Does it have an expiration date? The second thing that you should look at, which is quite interesting, is because it's different than social media, is to look at the cost of the per license cost. Because if the per license cost is a large amount, then you only need a certain number of those units sold to be successful. But if you're like social media, or if you're, especially with social media, you've got to continually, raise money over and over and over again to try to get the user base, because eventually you're going to use it for marketing purposes. But if you are a B2B, especially in business, look for a solution that, where you can, it's just much easier if you do it this way. A solution that you could actually sell for a larger amount. So with our solution, as you said, we have our enterprise pricing engine. With the difference between our enterprise pricing engine and Optimal Blue is that a lot of large banks and lenders, especially the largest banks, use our solution. So it's really enterprise. And we can do, there's several things that Optimal Blue can't do. On the marketplace solution, which our solution is called Marketplace, and it competes against Loan Sifter. What we looked at is, why should loan officers have to pay $79 per user? This user license. We should democratize that and make it available to everybody. And then, so that's what we've done. And so when you do that, you get mass adoption. So you've almost taken like this mass adoption where you're democratizing it, you're making it available to all brokers free of charge. And then you're asking, well, who pays for it? That it's the wholesale lenders that are marketing and pushing their programs to the wholesale brokers. But on the enterprise side, you have the large banks that are finally, because timing is everything in business, as you know, right? You got to do it. Actually, you got it in the wrong time.
I did not know that.
yeah, but look at your success. So but timing is everything in the sense that a lot of these large banks, when it comes to their pricing engine, it's got an expiration date. They can't manage and maintain it well because the code base is too old.
Yep.
What takes like months days takes hours and minutes and seconds to do inside our solution on the back end. And then so the front end is really the user experience piece. So it's really the opportunity, the fact that nothing has been done, for all these years, and taking advantage of the fact that you're selling a solution that's got a price tag that the chance of failure is a lot less. Now, I got to give it up to the companies out there that can sell their solutions at a very low cost. Like, let's say $30, $20, $15, because you need, because you need a ton of users out there,
yes,
in order to scale and in order to get your, your ARR to a certain level so
yep,
that you're profitable.
So what I'm hearing from this, and especially for the listeners here, is that do not be too worried if you see a market where you see an incumbent with a huge amount of market share, is because the reason that might actually end up being an opportunity for you is because they have the market share, is because they have legacy clients, but they also have legacy user interface. They also have legacy code. So in a sense, it's an opportunity, but not something which, Dawar, I really applaud you for looking into it that way, because most people would be scared to take on, in this example, for example, Optimal Blue, is because, as I said, they are mostly synonymous, or they at least used to be mostly synonymous with pricing engine. But what you looked at was beyond, is that because they are synonymous with this, that also means that they're less nimble. That also means that they have had this code since the 80s, and it's very difficult to go back and change the entire infrastructure, like we have seen probably with Encompass as the LOS, right? Is that it has huge amount of market share, but it also has very old code, which is very difficult to go and update it and build a kind of user interface that people and the users are now exposed to, or what they expect. So this is very interesting from an entrepreneurial perspective, is to kind of think outside the box, is to look at an industry where it seems there is no opportunity because everyone seems to favor a certain player. But you looked at it very differently, from the perspective of what kind of new user interface that you can bring in, how can you make the ease of implementation easier, and also while also playing the pricing game at the same time, thus getting adoption very early with the product.
And really, if you look at this is going to be applied to many industries. You look at it in the payroll industry.
Okay.
Paychecks and ADP dominated it. Then you have at that time it was Zen Payroll, now called Gusto. That's really made a dent. And it could be applied in a lot of industries that at some point these legacy solutions have an expiration date. But then there's also giants out there like Salesforce and Oracle that is in a different realm, right? I mean, they're in a complete different realm. So you really have to choose carefully and look at an industry and see what opportunities are available there.
So let's talk about this entrepreneurial journey through. I know that you've created a few things and ran a few things before, but let's talk specifically about Lender Prices. That I know that you kind of got the strategy correct, you got the product correct. What kind of challenges did you run into, like when you went and presented to people? Did they ask this question, saying, I mean, how would you do better than Optimal Blue, for example, in this case?
Oh, absolutely. The hardest thing, now you brought this other point, is the hardest thing as a startup is you've got this product and then you think that you know everything. And let me tell you, you don't know what you don't know. So a lot of the entrants in the space, and there's other PPE vendors out there, that they think that they know everything. And then they go into and we were naive too. We went in there and we said, oh, we have everything. You can do everything in our system. Trust us, use us. And then as you start working with them and they start peeling the onion, and they're like, well, what about this? And what about that? You're like, oh, we didn't think of building that. Oh, we didn't know you needed that, And then so it just became, over and over again. And luckily we had, it took many years. I mean, we're close to 8 years now, but it took some large institutions and companies to trust in us to help build out our solution, because you can't do it by yourself. But you do, at the very beginning, it was one of those things where we thought that we knew it all. It takes time. And that's why, like for us, you do have to raise money. The good thing with us is that we're not like the other fintech companies that raised a lot of money. Having an entrepreneur background, I was very skeptical, and it just felt weird when you're raising money because, you know, like you're using someone else's money, and I just didn't feel right. And it's like, I was very careful at spending, and that's why, you know, in terms of how much we've raised and what our revenue is at, that's why we're looked at as a very, strong, sustainable, company out there. But startups that start without having an entrepreneur background, especially backed by VCs, are just known where the VCs just start pouring money into it over and over again. And you hear all these things on the, in Housing Wire and all these different places where it says so-and-so raised another 30 million, so-and-so raised another 50 million, 75 million. And then all of a sudden they get sold, you know, they've raised 400 million and they get sold for 65 million. So having that entrepreneur background has definitely helped us. But that's the other thing too, is that be very careful, watch your expenses, figure out how you can scale and scale appropriately. And then also don't do too many things at the same time. That's another thing that we made a big mistake. We started out with we had a PP and a POS, and everybody had a POS. Now I think there's so many POS vendors I can't count.
Yes.
But you know, there's so many of them, right? And then that was another mistake that we made, is then we just kind of like said, okay, we're not going to do too many things. We're going to focus on one thing, and that's PPE. We augmented our PPE with our automated underwriting engine that leverages a lot of our rules. That's part of our PPE. And we said, let's just keep it simple, keep it focused. And that's what helped us.
No, makes sense. And great point about burning through cash just because it's somebody else's money. I remember, of course, I mean, Better.com has been in news for all the wrong reasons recently, but also I think I read one of the comments by Vishal Garg, the founder and CEO there, once saying that he had no idea how he blew through 500 million of cash in like 2 quarters. I mean, imagine that you're going through one of the best years for mortgage industry, and you blow through almost $500 million of cash without even knowing where that cash went. And that's the kind of cash management that gets into trouble, like Better is, for example, right now. And that's something that you're right. I mean, most startup founders, probably this is the first time they're seeing that much cash, and they don't really they don't think that at the end of the day you still have to go and raise again or sell again or exit again. And how you use that cash, if you don't treat it like your own, then you can run into a problem, because just because you see that, I mean, Better raised what, almost $1 billion, and you will think for a mortgage company that should last you a generation, but it didn't.
Yeah. And some companies today would love to sell the company for $1 billion. No, but I mean, you're absolutely right. But that's the typical VC model, is they want to scale fast. And they want to pour a lot of money into it, and they've got a lot of money. There's a ton of money in the VC and the private equity space right now, and they want to invest, and they want to invest in companies that they can scale. And they've got it worked out where they know that, certain companies fail and certain companies succeed, and they do very well. So at the end of the day, the VCs and private equities out there, they do very well. We're very lucky too, because we chose a private equity company that's very founder friendly. So they understand, how to work with us, and especially the ones that are entrepreneurs.
Sure.
Because whether it's a VC or private equity, they all have their sweet spots, and you just have to be very careful about who you choose.
Makes sense. Thanks for your time, Dawar. This was a very, very interesting conversation. And ladies and gentlemen, that was Dawar Alimi, the founder and CEO of Lenderprice, from a refugee from Afghanistan at 5 years old, to challenging one of the biggest players in one of the most competitive industries, not just in the country, but on the planet. Really, the mortgage space here in the US is extremely competitive, and he's taking that challenger brand and moving up the ladder there with competing with the very best and some of the very most well-known players that he's competing against. So congratulations, Dawar, on all the success. I look forward to be your client and see that side of the picture and see everything that you have built. Of course, I've been extremely impressed and look forward to our conversation. But thank you again for being on the show.
No, and thank you so much for having me, and much success to you. And thank you so much for having me on your podcast. It's been an honor.
Thank you.